Hi, folks. Thanks for joining us today for another exciting session of CPS Live with our very talented marketing managers here. If you have any questions for them during the presentation, you can enter them into the Q&A or the chat panels, and we'll make sure we address those for you. But without further ado, I am going to turn it over to our MC, Mr. Tom Berkler.
It's good to be back. We haven't done this in over a month since before the holiday season. And Lisa, you don't sound like you've missed a beat. Uh, the I see Matt Anderson's weighing in. We would anticipate, nothing builds expectation like anticipation, Matt. And I told him that you were coming in, but we still had Rob and Tom here, and like the singer Meatloaf once said, Matt, 2 out of 3 ain't bad. But I'm going for your late arrival, Matt. I'm going to punish you. I'm going to put you between these two heavyweights. Tom, kick us off. You were sharing. We had a good little pre-show, talk with regard to your personal situation. That is a classic example of real life bringing life to what we are all about. So do you mind sharing your topic today, critical illness, and
Yes.
your own situation?
Yeah, thanks, Tom. 1 year ago, my sister-in-law, who is 39 years old, was diagnosed with breast cancer. She had 2 lumps in her breast and has been going through treatment, 3 surgeries, chemotherapy, radiation over the past year. And she had a AFLAC critical illness policy that was sponsored through her employer that paid her a lump sum, $35,000, to help her with her medical bills because her stop loss on her medical plan was over $10,000, which she met very easily last year. But now going into this year, she's still doing radiation treatments and has a $175 a day copay for every time she has a radiation treatment. She got 2 more weeks left. The good news is she survived. Medical advances today have increased the chances for people to survive these critical illnesses, but without the financial part, it could be a financial catastrophe more than it could be a medical catastrophe. So we wanted to share what we're doing here at CPS in ways that you can help protect your clients from that financial catastrophe if they were to get sick or hurt from a critical illness, call it cancer. Let me share a screen here real quick. Right here. So it covers heart attack, mainly cancer. I do a presentation for a group of advisors and I say, is anybody in this room ever known somebody who has been touched by cancer? Raise your hand now. Everybody in the room raises their hand. So we're not talking about something that people aren't familiar with, right? So would an extra $50,000 made a difference on that diagnosis for your client? You bet it would have. But what people are afraid of is buying insurance that they feel they may never need or will never use. Where the critical illness policies that we sell at CPS through Surety, Mutual of Omaha, if you never use it, the day you die, it pays 100% of all the premium paid to your family as a death benefit, income tax free. So we're not just throwing money at something that will never happen. I try and tell people, look, it's like putting your money in a safety deposit box every time you make a premium payment. If you're diagnosed with cancer, stroke, heart attack. But one of the things they also have, take a look here, loss of independent living. You can add a little rider. It looks a little bit like long-term care now also. Would pay a lump sum if you had a stroke and couldn't get out of bed and take care of yourself. You're going to be fine. Now, I've got a illustration right here for a 35-year-old female, $50,000, only $37.87 per month. Now, over the next 50 years, she's now 85 years old. Never had to use it, thank goodness. She has put into the policy $22,000 the day she dies. If she's 85, that $22,000 is going to go right back to her family.
Yeah, wow.
And again, remember, that loss of independent living rider was only an additional $2
Wow.
on the policy. So this is something that, again, you just can't not talk to your clients about it, especially if there's a family history of cancer, stroke, heart attack, and you can get an app on your phone. You can actually quote this stuff with the Assurity quoter, or Mutual of Omaha has the same thing. You put the app right on your phone, and you can quote this for your friends, family, let them know what it would cost them. And it's just a conversation I think is worthy of the people you love and the people you want to protect, because not everybody has the luxury of getting an employer sponsored plan like she did through Aflac. So with that being said, I just wanted to share a little insights to a reality type situation and how critical illness could help protect
Tom, when
your
we get
clients.
into a topic like this, it pushes a lot of people outside their comfort zone, what they do day to day. But as always, I assume that any of our agents can come to you and Steve and say, here's where I am, they need this, and you take the ball from there. Am I putting
Yeah, that's
what?
true. That's true. We will drive the bus for you if you want to make an introduction, and you are still compensated on these cases, even if you introduce us to your client and we do all that legwork for you, you're still compensated and go on the application. So that's something that we can definitely help with. This is an area that we specialize in. Again, you just don't want to not have that conversation. Then one day hear about one of your friends or loved ones got a horrible diagnosis.
Yeah, and we aren't here to push away our surety business, but you had a little story there. We tend to take some of these, let's call it a supplementary plan, if nothing else, that helped your sister-in-law. We tend to take these Aflac lightly because they have such kind of light commercials, not the least of which have my favorite coach on them. Add the fact that this little employer-sponsored Aflac policy, how that helped her.
Well, it paid that lump sum and gave her the luxury. If she had to take time off of work, if she's able to pay her medical bills, it gave her that, didn't have to worry about the stress. She was able to focus on her recovery more than she
Yeah.
would I have to get back to work because I have to pay my bills, or if I need to take a day off or two because I've got chemo and things like that. It just gave her that financial luxury of being able to focus on that recovery aspect rather than worry about the financial aspect.
Yeah. The either you or Steve, Lisa's put the contact info up. Lisa, we don't have a question on that, do we? That's just the information you put up, the contact information.
Yes, no questions. Just letting you know
Yeah.
where you can reach Tom.
Well, put up Matt Anderson's contact information because he's next. And
Ooh, all right.
we've emphasized in the past that not only was Matt Anderson a schoolmate of quarterback Russell Wilson, but he was responsible on the sideline to handle his Gatorade bottle during the games. And of course, Matt, you're a little bummed out because for reasons unknown, the Denver Broncos let go of what I think is one of the better quarterbacks in our lifetime. But do you think you can get over that Russell Wilson incident and help us out with some information today?
It's definitely been a rough blow for Russell Wilson camp the past couple of weeks. I would say that if you compare Russell Wilson's stats to Patrick Mahomes' stats this season, there's a clear winner, and Russell Wilson actually has put up better stats than Patrick Mahomes. But, I understand it's a business decision. There's all kinds of things to take into consideration. So
Scoreboard.
I will get over it as well. Tom, no, thank you. Cool. I'll get over it. I'm sure as Russell will get over it. And today I did want to talk about, kind of give everyone an update on state-funded long-term care plans, right? So what are we seeing in California? The LTC committee has submitted their final actuarial report in the state of California. And it's actually for the first time of all the reports that I've seen, the panel seems a little down. So they were kind of optimistic about how much coverage they could get. This most recent time, there's a couple of important factors that came out, namely that all of the pricing was based that the plan would be bankrupt in 75 years. And if you don't want the plan to be bankrupt in 75 years, you have to jack the tax up even more. Additionally, the plan was assuming that the state taxes were going to be invested in the stock market, which is against the Constitution of California. And additionally, they were assuming a 10% rate of return. So when you kind of factor in all of those additional factors, I think the panel realized that the tax was getting a little out of control, and they've really scaled it back to something. I think they're recommending something more like the Washington CARES Plan Act we saw in the state of Washington, with like a $36,000 pool of money and an estimated tax of anywhere from like maybe 1.2 to 1.3% when you take into consideration those additional features. So that's the latest. I do suspect that legislation will try to pass something. Again, probably much more scaled back than they had initially intended, though. So,
Matt, you made the point that if we're honest with ourselves, and I don't want to get anybody in trouble here, but this is a revenue generating device for the states to try to make up for the shortfall that's occurring in all of the Medicaid programs around the country.
correct. Right. Currently, states are having to pay, exponentially rising cost for clients that don't have plans in place. They don't have assets or income to pay for it. So the states will take those people over. And the cost of the states taking those people over is getting out of hand, right? And so all the states are kind of in a similar boat where they're trying to find new ways to generate revenue to help pay for, alleviate some of the cost of these plans.
Man, I like the fact that you emphasize that, let's start, everybody needs long-term care. And the fact of the matter is, a state-imposed plan is not going to be sufficient for what your needs are. And even if buying a personal policy doesn't get you somehow opted out of the state plan, it makes up for the insufficiency of the state plan. At best, from a practical standpoint, all of this state activity is an interest generator that agents can use to get their clients to buy adequate plans with a good carrier through CPS.
That's correct. There's going to be a lot of interest, and I'd say there's going to be a lot of people that are looking to avoid the state tax. The most difficult thing about it is we don't know exactly how it's going to work, and we don't know exactly how people are going to be able to get out of that tax. We have good guesses, we have estimates, but either way, I think it's an excellent way to use the interest in long-term care in general and potentially set them up to potentially get out of the tax or reduce that tax, while at the same time having a really strong, solid private long-term care plan at the same time.
Thank you. Matt. I think what everybody's waiting to hear, though, this has been very interesting what you're talking about. I haven't read anything definite. What is your prediction where Russell will go? Who will pick him up, maybe?
I have no idea where he will be. Just fine. What, his wife's a Sierra. They've got plenty of money. Maybe they'll just ride off into the sunset. I'm sure he will be fine.
Yeah.
Maybe return to Richmond, Virginia, and start a NFL team there.
Yeah, and so he stopped calling you now, is what you're telling us, right?
He is not. He's not been taking my phone calls for the past.
Yeah, he's gone dark. Dark. Speaking of someone who would never go dark on you, Rob Reedy. Rob, kick around a little bit. You and I were talking. We're running into a lot of new agents that you've been able to pull a little more deeply into the life insurance needs department. And you've gotten a lot of response from agents who say they're running into more and more situations that require buy-sell and key person insurance. Kind of talk that. Where are you with that? And you and I can kick around what we can do to help them. It's not a complicated area, believe it or not. I think you're on mute there, Rob.
Yeah, exactly, Tom. So what I'm seeing is it's still business protection. Key person, buy sell often goes overlooked. So we are talking about it more and more and talking to advisors about get out there, have a conversation with your business owner clients to make sure that if they have any key people, that if they were to pass away, would that have a devastating effect on the company? We can ensure that. The same goes for buy sell. If they have a buy sell agreement, how are they going to fund it? If they don't have a buy sell agreement, They should probably talk to their business owners about developing one. And then it's an easy and a simple sale to help them fund that with simple term life insurance. So it's overlooked, it's extremely important, and it leads to some of the largest cases, especially last year. And in fact, just a couple of weeks ago, one of our agents placed it was a joint need policy, did key person and buy sell all in one, and it was $109,000 commissionable premium for that agent. So very important to that business, and obviously a great case for the agent.
You know, Rob and I, you and I always talk about the fact, what are good conversation starters? And I like what you tell agents with regard to buy sell. You sit there and encourage them to ask their business clients, who is going to be your business partner when you wake up tomorrow morning?
Right.
Because if you don't have a written agreement, there's you don't know who it's going to be.
Right. You could be in business with a spouse that doesn't know the business, or maybe some children that you don't really get along with. So without that agreement, you just don't know.
Yeah, your lifetime work is up for grab. They always say, "Oh, you know, I love my partner's spouse and all that," and all it needs to occur is to be in business with him or her, and you realize you weren't that crazy about him after all.
Exactly.
The other thing I like that you do with agents with regard to key person is ask a business what their most valuable asset is, and they'll think in terms of brick and mortar or maybe intellectual property or things of this sort, and that's how you kind of hone them in on what would happen if suddenly one of your key people were to pass away.
Right, and those first, two items you mentioned, they have coverage in place to protect those things.
Yeah.
But I would argue in this situation right here today on the call, Tom, you would be the most valuable asset. So we would put a key person policy on you to make sure if something happens,
Well,
we're protected.
The Denver Broncos didn't feel Russell Wilson was their most valuable asset.
Guess not.
Tom Nichols, Lisa is getting private messaging. There's a storm of calls wondering about your change of image over there. So let me pull you back in. One thing that's not to be overlooked with key person or buy sell, Tom, that you and I involve, a death is not the only reason you may need to buy a partner out. Sometimes if they're an employee owner, it's disability. And you and I have kicked that around. I don't know if you want to throw a word in there.
Well, the likelihood of the business partner getting sick or hurt and not dying is much greater, first of all. And the more partners you have, the greater the likelihood that something is going to happen. So if you've got 4 partners or 5 partners in a law firm or a medical practice, the likelihood of one of the 5 of them going down before everybody retires is pretty high. And so you could get disability buyout protection to protect the business in the event they could no longer be a managing partner. So thanks, Tom.
Yeah. And it's a tougher sale because, as Rob said, generally you need a buy sell coverage for a pretty much known period of time. People usually want it only in force until they're going to retire. And so it's usually term insurance was a relatively inexpensive sale. And sometimes you and I bring them over to disability for that coverage. And there's a little bit of a sticker shock there because the disability isn't quite as cheap as the term insurance. But
because of the claims experience, because again, because the likelihood of a healthy business partner dying before they retire is so much smaller than having a major accident or illness come along.
Yeah.
I would argue that they're both equally important, Tom. So if you're doing a buy sell or key person, you should be addressing both needs rather than just one, and then you got your plan half completed. So
yeah. Well, gentlemen, any other comments? We've beat up a little bit on Matt Anderson today, but again, the personal messaging Lisa's telling us that generally the crowd is enjoying that, Matt. I'm sorry it's at your expense. You have any final word in your own defense here?
I'm glad that people are happy.
Lisa, any questions in the chat box?
No, we are free and clear of questions today.
All
Good
right.
job, gentlemen.
Take us out of here, and you all have a good remainder of the day. I'm 3 hours ahead of you, so as is Lisa, so we can assure you it's coming your way. It'll happen. So
thanks, everybody.
Thank you, everyone.
Thanks, everyone.
bye.